Shocker. Gavin Newsom wrong again on energy policy. Why? You'll find out next on the Energy News Beat Stand Up.
Cops from the UN have failed, and it's time for a real dose of climate realism. What in the world will Gavin do for a speech punchline now? Holy smokes, you can't buy this kind of entertainment. Gavin Newsom is speaking at COP30, and you know, when President Trump came out and started going drill baby drill, he ran right smack into Gavin Newsom in Brazil. What are we talking about here? Governor Newsom on stage enters in at COP30, clutching his script like a lifeline in a Sao Paulo side event along a Milken Institute CEO, Richard, I don't want to mispronounce his name, but I believe it's Ditso. Newsom dropped a zinger that's equal puts alarm and irony. China gets it. America is toast. If we don't snap out of our fossil fuel stupor and chase Beijing's dominance in a clean energy supply chains, manufacturing and market flooding across the EU and Africa and beyond, he is so out to lunch. Michael, this man is absolutely weird. And I'm going to use this. He is up there with Timmy from, the weird guy that who was the vice president pick for Kamala Harris. Punch bag Timmy cannot even hold a candle to this one. This is terrible. Gavin Newsom's war on oil and gas in California has elevated California to a national security risk of biblical proportions. Cats and dogs are going to be falling out of the sky before we get energy security in California.
Yeah, I think just Gavin Newsom, he understands the talking points, but he doesn't understand the substance behind it. He's not wrong when he says China is running the clean energy supply chain. They are. They truly are. But that does not mean that China is using said supply chain to power their economy. Just because they're making solar panels doesn't mean they're putting them up in Beijing. What they're actually doing is buying more oil, buying more coal. We've been talking about that for years now. So it's one of those, signal versus the noise. The signal is, they're making all these solar panels. Well, the question is, are they using all these solar panels? What China has aptly, in my opinion, figured out is that the world wants solar panels. The world has put itself on this clean energy trajectory that it feels that at least the China feels like they won't back away from. So if we can go ahead and create a moat around what is going to be theoretically the world's new energy source, whether or not China uses it or not, it gives them a strategic national security advantage. So it's just a classic Gavin Newsom understanding the talking point, but not looking a layer deep and looking at what's actually going on.
No, and I believe President Trump, in his name calling, Gavin Newsom, is actually pretty funny and accurate. Let's go to the next one. Speaking of President Trump predicted the return of coal, but not to its glory days in the U.S. This is from Doug Sheridan on LinkedIn, and Doug Sheridan is one cool cat. Javier Blas from Bloomberg wrote that Trump has confidently predicted the return of coal in America. Trump won't resurrect coal consumption to its glory days, but he's likely to arrest its decline, freezing demand around current levels. U.S. coal demand will rise this year to about 465 million short tons, driven by higher electricity generation. That's down 60% from 2007's record high. Michael, if we did not do this, Secretary Chris Wright's team out there at the Energy Department put out aptly that we would have rolling blackouts across the United States if the Trump administration, through Secretary Chris Wright, Doug Burgum, and Lee Zeldin, did not take aggressive action and restore our coal. We're actually putting in a new coal plant. We're actually working on clean coal things. Coal is going to be here for a while. Will it be where it was? No. But are there going to be more new coal plants? Nuclear is decades away from really making a difference. So you're either going to have coal, natural gas, or smaller nuclear, and it's not going to be enough to make a difference. So it's back to coal and natural gas.
Well, and I think you say back to coal. I think Doug Sheridan in this article points it out that it's important to remember that coal consumption year over year throughout the entire world has been increasing for the last 10 years. So it's not like we haven't kept in not using coal. The world's been using it. It's certain sectors of the world have lowered their coal consumption, but other areas, like we talked about China, like we talked about some developing nations, they're going, I don't want to say all in on coal, but they're using coal because it can be a good power generation resource.
And clean coal is good. And when you take a look at the map that you can find off of energynewsbeat.co and then go to resources tab, go look at the global coal tracker and you will see. In fact, I will go add that to this article in here. The amount of new plants that are still being constructed in India and Asia and China is huge.
Yep. All right, let's go to the next one.
Billions are flowing into the U.S. nuclear sector, but how long until returns are realized? I started writing this article when I started figuring out going, I love me nuclear, love my interviews with all my energy, my nuclear CEOs. But when is it going to impact? The U.S. nuclear industry is experiencing a true renaissance fueled by massive investments and a surge in demand from energy-hungry AI data centers. Michael, you and I talked about the 3 Mile Island. I did not have that on my bingo card a month or so ago when they started putting that one in. According to recent reports, around $80 billion is pouring into new nuclear projects. Tech giants like Amazon, Google, Microsoft betting big on advanced reactors to power their AI ambitions. However, highlighted in Bloomberg's analysis, this nuclear bet won't deliver meaningful power to the AI boom for at least a decade, raising questions about timelines, risks, and investor patience. Michael, what the oil and gas industry has lived through by being held accountable for investor returns is really now the gold standard for returns to investors. And the nuclear fallout, as a pun would say, the nuclear fallout of investors is, I think we're going to see a bit of a peak and a valley approach nuclear until returns from projects can start rolling in.
Yeah, I'm again completely with you. I think nuclear is years and years away. Obviously, if we're going to move to this AI focused future, which I think everybody believes we are, it's going to need to play a huge role. We're going to need to innovate because the current layout is not great.
Oh, no, absolutely. But let's roll into a very similar story here. Chevron rolls into West Texas for first data center project following Liberty's business model. I had fun writing this one. In a bold move to capitalize on the surging energy demands of artificial intelligence, can you see the theme for today's show? Chevron has announced its first dedicated power project for a data center in West Texas. This initiative marks the giant strategic pivot in the power generation sector, leveraging its abundant natural gas resources from the Permian, which is really needed at this time to fuel the AI boom. However, Michael, as we get into there, they're going to be powering this bad dog, GE's Vernova's advanced 7HA natural gas turbines, and the setup is for co-location, meaning the power plant will sit adjacent to the data center behind the meter to minimize the transmission losses and enhanced reliability, which means the Permian folks will not be paying for the transmission lines, or they will take advantage of the cost increases. This is a great thing. However, my interview with Ron Gusick over there at Liberty Energy, they've been doing this now for about 3 years, running down this path and creating data center natural gas, and they have notched it up to a lead in nuclear as well too. So hats off to good management over there at Ron Gusick at Liberty Energy. He's a cool cat. They are on this long before Chevron.
No, absolutely. They were on it. I think they're doing a great job over their liberty. Obviously, that's a lot of why Secretary Wright is now in the position that he's in because of what he started. Ron Gusick has sort of picked up the mantle and continued to run down the road. But no, I absolutely think what Chevron's doing is I think they're trying to pivot themselves. I mean, your only really peer competitor, if you're Chevron, is Exxon, and I don't want to say lag behind them. You've always been smaller than them, but if you have any desires to catch up and eventually surpass ExxonMobil, you've got to do things a little bit differently. So I like this new transition, I guess, to new energies. I mean, it's always great when McKinsey gets a nice big consulting check to come in and do another reorg that doesn't really mean anything, but it gives some consultants ability to bill some nice billable hours.
You bet. When the Bobs show up to lay people off, yes. Right?
So what exactly do you do here?
Isn't that a great movie? But what exactly do you do here? You always are a little worried about that. Let's go to the next one here. Oil and gas demand could grow until 2050, says the IEA. In the words of Monty Python, oil's not quite dead yet. I took a little liberty with that one when, as they're sitting there going, I'm not quite dead yet. And they smack him in the head as they're hauling him out. The International IEA released its World Energy Outlook, painting a new picture of global energy trends that challenges earlier narratives from a swift transition away from fossil fuels in a revised scenario based solely on current policies and regulations known as the Current Policies Scenario. The CPS, demand for oil and natural gas, is projected to continue through mid-century with no peak in sight before 2050. And their chart, Michael, does not peak out.
Yeah.
So I think they've learned a little bit on this, and I'm not sure if it was Secretary Chris Wright getting over there and pulling the purse strings and going, we're about to pull the IEA's funding. I think they are 100% motivated to write a report only leaning to people that write the check.
Yeah, nope. I mean, I'm just laughing because it's unfortunately true. I think, we're not dead yet. We've never have been dead yet. I think and I think today's specific price action on oil and gas shows that we're in a position where oil production is constantly growing. Technology is getting better. It's not going anywhere. So I think this highlights, I think, a lot of what we're seeing. I want to talk specifically about that price action that we saw today because some interesting stuff out of that. But first, let's pay the bills. We'll be right back on the other side. As always, guys, the news and analysis you just heard is brought to you by world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed, everything you need to know to be at the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit the links in the description below for all links to the timestamps, links to the articles, and specifically subscribe to the show on YouTube, subscribe to the show on Apple iTunes, give us a follow there, subscribe to our show on Spotify, please leave comments there, and subscribe to our Substack, theenergynewsbeat.substack.com. That's probably the best place to support the show. Stu does a great job of releasing, 2 to 3 articles a week that really encompass the big themes that are going on. We also drop all of our podcasts there, which give a little bit of a breakdown. We just had a great podcast. So I highly, highly recommend everybody subscribe to our Substack, theenergynewsbeat.substack.com. We'd also like to thank friends of the show, Reese Energy Consulting, for supporting the show, guys. Reese Energy Consulting is the foremost midstream expert, guys. If you at all are dealing with issues in the midstream space, whether you're an upstream company and need help with first purchaser's contract or renegotiating your gas contracts or figuring out where you're going to tie in your next pad because you've got multiple different options and you're trying to break it all down, Reese Energy Consulting can help. If you're in the midstream space, I need an extra pair of hands, need some permitting or regulation help, or need some red team analysis on a final investment decision, guys, they have the team that can help you. Check out reeseenergyconsulting.com. They have clients everywhere and all throughout the country, from 2 people in a garage all the way up to the largestly publicly traded companies in the world. So if you're wondering, are you a good fit for them? The answer is yes. reeseenergyconsulting.com. And finally, guys, invest in oil.energynewsbeat.com. We are coming up on the end of the year, and I promise you guys, you do not want to be paying money to Uncle Sam. You want to keep as much money in your pocket. You want to diversify your portfolio a little bit, and you want to get some dividends. You can do that by investing investing in oil and gas, check out investinoil.energynewsbeat.com. Fill out our portfolio survey and our tax calculator. And guess what, you guys? You guys are going to get a nice ebook that tells you here's what you should look for when you invest in oil and gas, and also figure out what your tax burden is and figure out how much you might save relative to your tax burden if you did invest in oil and gas, guys. We practice what we preach here, guys. We do this stuff ourselves. Investinoil.energynewsbeat.com. Don't give your money to Uncle Sam. Figure out and find out if oil and gas investing is for you. Depending on if you qualify, we will, again, send you all that information, and we may or may not point you in the right direction. Again, investinoil.energynewsbeat.com. All right, not a great day if you're in the oil and gas space. We opened the day trading just a little bit above 60.50. OPEC decides to release a pretty brutal bearish report. Price is now 58.38 as we record this a little after 1 p.m. here on the 12th. What did OPEC say specifically? Well, for months now, they've been constantly banging the drum, and we're still in a demand or a supply deficit, meaning demand slightly outslips supply. Well, for the first time in a while, OPEC has released a report saying that supply will match demand next year, and that's due to their wider production increases and continued strength from the U.S. oil production. Quotes out of everywhere are saying Phil Flynn over with Price Futures Group, the prospect that futures market is balanced is definitely what drove prices down. We just mentioned the EIA, which dropped its world annual forecast. I think it's really interesting. Here's Giovanni Stovano, who's a UBS analyst. Due to a modest downward revision of oil demand and higher non-OPEC plus supply in Q3, the OPEC secretariat now predicts a surplus for 3Q. That said, is still much smaller compared to EIA and IEA. Well, obviously, OPEC's going to have a little bit of a smaller one. We also, obviously, with the U.S. government reopening, yay, the government's open. It's always good when the government works. The bearish signal for oil is now flights are going to increase, because that was part of the sort of the bearish look was, for 30, 45 days, we haven't had full flights going, jet fuel, all that good stuff, but it continues to tumble. Outside of that, Stu, I did see an interesting M&A action this morning. Baytex announces the final exit from U.S. Eagleford assets, divesting entirely of that Eagleford position to an undisclosed buyer for $2.3 billion. Their stock jumped like 8% off the news, which is funny because, so their entire Eagleford position sits somewhere around 269,000 gross acres, about 70% operated, So remember that number, 269 gross acres. They divested for $2.3 billion. Well, remember, the majority of that acreage, specifically 167 or 162,000 of those acres, were acquired 2 years ago when they acquired Ranger Oil for, drumroll please, $2.2 billion. So we do the math. You're looking at about an extra 100,000 acres they already had in their portfolio. They merged with Ranger. That entire $2.3 billion $2.2 billion they spent to buy Ranger, they only got 2.3 for Ranger plus their legacy Eagleford, and they dumped about $400 million into development. So it goes to show you, one, people are always like, M&A, merge, be great. Well, sometimes it doesn't work. And also, when companies shed non-core assets, because Baytex is primarily located in the Monty and Duvernay up in Canada, the market loves it. Even though this transaction on a net Eagleford basis was a net loss for the company. So Super fascinating.
Cool.
Just, in real interesting. And I think it goes to show you again, M&A is great, but you got to be careful about how you underwrite this stuff.
Right.
So
looking at the deal, looking at the deal is pretty important.
No, well, and just, again, making sure that a lot of this stuff makes sense. We find it interesting. All the best, though, to all those Baytex folks. We love them there. It's been a good week, Stu. It's been a long week. We're ready to keep it going. Who's dropping on the podcast Friday?
We've got Dr. Lars, and it is going to be a big one. It is going to be absolutely huge.
Love it. Love it. Well, that'll be great, guys. We appreciate everybody checking us out here. Have a great Thursday. Have a great Friday. You'll see our weekly recap on Saturday. We'll be back in the chair Monday, guys. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow.